So, what if you could take 8 long years of a professional trader's blood, sweat, and tears and just condense it all down into one single clear roadmap? Well, that's exactly what we're going to do. We're going to build the fastest path to start trading from absolute zero. Let's get into it.
Okay, let's just get right to it. This is where it all starts, with the single biggest mistake new traders make. They're like medical students who decide to skip class and just try performing open heart surgery. They jump right into the live markets, treating their hard-earned cash like it's a video game. And, the results are just as disastrous as you'd imagine.
So that begs the question, right? How do you build a trading process that actually works? The answer, I'm going to tell you right now, it's not some magic indicator, it's not some secret signal. It's about building a machine, a repeatable process where every single part, every gear has a specific purpose. And today, we're handing you the blueprint for that machine.
First things first, we got to understand the flawed blueprint that almost everyone starts with. It's a plan that feels right, it feels intuitive, but it's fundamentally broken, and it almost guarantees that you're going to fail. Just take a look at this. It's night and day, right? On the left, you've got the beginner. They're sprinting towards a cliff, expecting to get rich in like a month. But then you look to the right, and you see the pro. They play the long game. They take months to just learn, to save up capital, because they understand that small, consistent steps over a whole year, that's what leads to massive results. It's a marathon, not a sprint. You know that patient, long-term approach from the pro? That isn't about strategy. It's all about psychology. And that brings us to the absolute most important part of our trading machine, the psychological engine. Before you even think about looking at a chart, you have to get your mind right.
Listen to this. The trader whose experience we're pulling from said this about the book Trading in the Zone. He said that if he had started here, he would have shaved years off his learning curve and saved thousands and thousands of dollars. See, this isn't just some helpful reading, it's the foundation of the entire machine.
So what even is trading psychology? Well, think of it as the internal framework that stops fear, greed, and your own ego from hijacking your decisions. Because without this rock-solid foundation, even the most brilliant trading strategy in the world is just going to crumble under pressure. It's that important.
All right, so with our mindset in place, let's install the operating system for our machine. This is the math of profitable trading, and I promise you, it is completely counterintuitive. It's probably the exact opposite of how most people think about winning and losing.
This right here, this slide reveals the core misunderstanding that trips everyone up. Beginners are obsessed with being right. They chase that high win rate because it feels good. But professionals, honestly, they couldn't care less about being right. They are obsessed with one thing, making sure their winning trades are significantly bigger than their losing ones.
And here's where the math just clicks. Look at this example. You start with $450. Your win percentage is only 40%. That means you are wrong 60% of the time. But, and here's the key, your risk-to-reward ratio is 1 to 2.5, so your winners are 2.5 times bigger than your losers. After 100 trades, even though you were wrong most of the time, your account grows to $715. You were mostly wrong, and yet you are highly profitable.
So, let that sink in. The crucial point is this. Once you truly get the math, losing streaks, they stop being scary. Losing 5 trades in a row doesn't even matter if you know your 6th trade can wipe out all those losses and then some. Suddenly, trading becomes a game of statistics, not a stressful game of prediction.
Okay, so we get the math. Now, how do we actually apply it? Well, it's time to look at the dashboard of our machine. These are the practical, nitty-gritty tools you need to execute your plan with mechanical precision, trade after trade after trade.
Okay, this is the golden rule. It is non-negotiable. That beautiful math we just looked at, it completely falls apart if you don't do this. You have to risk the same uniform amount of money on every single trade. If you risk $50 on one trade and $150 on the next one because you have a good feeling about it, you've just destroyed your statistical edge. The markets are random, your risk cannot be.
So how do you actually risk a uniform amount every time? It's a little thing called position sizing. And trust me, it sounds way more complicated than it is. It's just 3 simple steps. First, decide your dollar risk. Let's say it's $100. Second, find the distance between where you get in and where you get out if you're wrong. Third, just divide your risk amount by that distance. That's it. The number you get tells you exactly how much to buy or sell.
Now, you do that simple calculation, and you might see a number like this, and you're thinking, whoa. It might tell you that to risk just $100, you need to control a position worth $34,000. Now, for most people starting out, that's just impossible. And this is the exact problem that leverage was designed to solve.
With 50-to-1 leverage, you can control that exact same $34,000 position using only $700 of your own money. And here's the really important part. Nothing else changes. Your actual dollar risk is still just $100. Your potential profit is the same. Leverage just lets you get in the game with a smaller account.
But listen, leverage is a serious tool, and you have to respect it. There are two huge things to watch. First, you're going to pay higher fees because they're based on the total position size. And second, and this is crucial, you must make sure your stop-loss price gets hit before the exchange's automatic liquidation price. If it doesn't, the exchange closes your trade for you, and you can lose way more than you intended.
We've built the machine, we have the mindset, we have the math, we have the tools. Now for the final, and maybe the most critical step of all, the simulator. This is where you test drive your machine. You prove it works before you risk a single real dollar.
And proving your system really comes down to two simple actions. First, you journal every single trade. You log your wins, you log your losses. This helps you find your actual win rate and risk/reward, not just what you think it is. And second, you backtest using a tool like TradingView's Bar Replay. This lets you trade old charts as if they were live, so you can get hundreds of practice trades in without risking a dime.
And that's the whole point of all this practice. You're not just practicing to get good at clicking buttons, you're practicing to build unshakable confidence in your process, so that when you finally go live with real money, it should feel, well, almost boring, because you've already done it 100 times, and you trust the outcome, you trust the math.
So we'll end with this. This is the one question you have to ask yourself and be honest. Is your goal to be right, or is your goal to be profitable? Because the path to being right is fueled by ego, and it leads to chaos and inconsistent results. But the path to being profitable, that's fueled by process, by discipline, and by math. The choice is yours.